So I think the topic of the day is reactive versus proactive, predicting versus waiting for confirmation. Confirmation is something that I always struggled with because when people speak of confirmation, they often use a combination of indicators, a vague time frame that they don't always point out, and then a candle. And the candle's the big thing, right? You see the volume kick in, you see a big engulfing candle, and that gives you your confirmation off of your level that you were targeting that you're in the right direction, you're going with the trade, and you're solid. The difficulty about that, easier said than done, is that if you're really just waiting for that candle to close, what does your risk look like at that point? So a good example would be right here. Let's say this is yesterday morning. This is the 30-minute opening range break here. So we finally break above, we close. Now we want to see what bears can do. They can only bring it right down to the top of the 30-minute range, and now you're waiting for that reaction. This is just a 5 minutes. You have a 30-minute opening range break, and you have 5-minute candle time frame. So let's say you wait for this close here at 26,119, and you go in on that break. So let's say you get in at 121. Your risk is at, 65, right? That's 35 points plus another 20. That's 55 points right there. If you were to go in on just one full-size contract and use that as your stop, you're never going to make it. So again, you're back to an arbitrary stop, which will likely get taken out. You can trade the MNQs, but you need a lot more length, right? You need at least 55 points in the same direction, which you do get. We've been on a tear. It's just bulls every day, all day. Bears have no chance. But I'll show you where that delicate balance lies and how you can still be right and wrong at the same time. So yesterday I did nothing but longs. I still came out at 700 plus per account, something around there. If we look here, I was long at 938 initially, got stopped out for 70. 950 I'm long, get stopped out for 375. 3 minutes later I'm long for 554. 1007 I'm long for a stop out of 655. 2 minutes later I'm long again for 1273. So thank goodness for this last one. This one I kind of saw coming. I did size up a little bit. I knew that once we got past, I knew that we were going to get moving. I knew that we were going to get a squeeze. I don't even think so. If I went in at 10:09, I barely made the opening range. In fact, I started right here at 10:07. So my initial was on opening range break, but as you can see, I was stopped out. So I'm sitting right in here, right where my big move. I take a 655 loss at 10:07, so that's probably this guy here. I got stopped out on, right? You go, this looks very bullish. I'm thinking I'm going to get the break. It comes back, and then immediately, I'm able to re-enter. I go into drawdown for just a moment, and then it starts to finally rip up. And this didn't rip up instantly. It started to move up, and it definitely started to stall out a little bit. I remember it was struggling in the 80s, and then in the 90s, it kind of held for a second. And once it broke, it broke. And then I quit for the day after that. But going back, right, proactive versus reactive. When you're trying to predict, when you're trying to be too proactive, there's a good chance that you're right, but you're too early. And if you look at, I'm not complaining at $700 per account. It's my second best day. I really struggled through here. I lost a couple of accounts in here and just took them off because they didn't last very long. But I've been trading these two accounts just like the previous months where I went 32 straight green days, I'm now starting to get back into those green days again. And my percentage rates are much lower, right? I'm, 50, 44, 50, 42, 66, 33, 40, but I'm still making money. I'm just taking tighter stops right now. But I'm now seeing with those tighter stops that I'm still being a little bit too predictive. I'm being too proactive instead of really waiting for that confirmation. Now, I still argue that waiting too long for confirmation is an issue because you really increase your risk. So which one's better? Do you increase your risk and maybe reduce your size and still get your win? Or do you try to go in early, a little bit of a predictive, proactive nature, but possibly get stopped out more, even though you're in the right direction? And, it's a hard balance. I think I still struggle with it, in all honesty. So what I'm trying to say is, I guess I don't really have the answer. I still think, yes, be reactive, but try to find cues outside of just engulfing candles to get your entry, only because you really could wind up producing such great risk that if you did get stopped out, let's say on this candle here, that's hard to recover from. A 55-point hit, even on the micros, is really hard to recover from, unless you're just patient, right? If you're, I kind of have to trade early in the day because I have other work I have to do. So I really got to get in, and when I sit down, I do maybe force some trades. Like which is probably why I'm in early versus being able to have the whole day or whole morning uninterrupted entirely. But I too need to find that balance. Now, let's say I wasn't messing around with this break here, and I was trying to be more patient about the opening range break and retest. Well, it's been so bullish that it is tough to get back down entirely to have these really, really clean retests of certain levels of interest. So when it's so bullish like this, you oftentimes do need to use your EMAs. This is when they're the most powerful. Is if you look at the daily candle, I mean, it's like, I think we're 6-7 straight days in the green without any pullback. It's very parabolic, and we're soon going to have a retracement. But until then, we have to remain bullish until we start to see a break of structure from that. So if you look here and say, okay, well, we broke out, and then selling pressure began here at 106. Well, your cleanest line, in all honesty, is that you wait up. So right here, I'll take all this off because this is meant for the whole day going into today. But that line that I just drew, that's it right there. There's your top, there's your test, right? Once it stops right on that line, and you have this great separation between the EMAs, which were probably somewhere around here at the time. They're not going to be directly under the candle. You possibly want to say, okay, well, now your stop should be maybe, let's call it, 96, 97, just far enough under. And maybe you're looking, I would say, to get, like I always say, about half or 3/4 of the way through the candle, just to know that you've got enough momentum to probably engulf, right? You're not waiting so long that you're clearing the top now, 50 points above. But if you go, let's say you start going in right around 3/4 of that candle, let's say 25. All right. And you go down to one, that's 25 points versus, 50, 60 points. 25 points is still semi-acceptable on a full contract, right? If you were unsure, you could start in early. You could start in with a half contract on the MNQs. And then if you really like where it's going, you can add in another 5 for what is a full-size contract, right? And then your target, well, yesterday the thing was just killing targets. We're kind of in, we're just killing it right now. And that target was 26 too. It's it's so far now. There really isn't many. You really just target points, I think, at this point, because the highs are getting a little wild. We're pretty soon we'll be at all-time highs again. So you just target 1-to-1 is what I would say, right? So you're going at 25, you're probably going to try to, look at 50 first. And then if you can beat those highs, what's great about MNQs is you can scale out a whole lot easier. And then you can just let it ride and say, hey, you know what? I won't sell until it closes below the 14 EMA, which is this blue line. which ended up being at 26,201. So if you had gone in on retest of this line here at 124, and you didn't fully exit your position until this close at 198, that's an incredible trade, even at just 2 micros. That's an incredible trade. And then past that, you had one really big, right? Once again, I'll take these lines off. You had one huge bull flag right here. If you were trading at 12:55, which I never trade the lunch hour anymore, it's never worked out for me very well. But if you did and you came back at 1 o'clock, you saw that big flag, you saw that the sellers couldn't get even anywhere near the VWAP, anywhere near the opening morning range. And you just wait for a new flag, right? There's your big dip. You wait for a new flag here. It's a little choppy. You know, you probably would have felt some heat with this candle here. But yeah, you could have gone in on this break at 203 and then just targeted top of the line at 253. And once again, on the 5 minute, 20 minutes later, you got another 20, 30, 40, 50 points. So it's not difficult. And when it gets like this, when we're super parabolic, don't try to predict a short. I used to do that all the time, and I'd get fully wiped out. I would think that, oh, well, it is so high right now. It's so parabolic that we have to retrace. I mean, how many shorts have been blown out, right, in the last couple of days because you just have this feeling that it has to retrace. Here we go again. I guarantee you there's a bunch of shorts waiting at 557, right? I should make sure that I have my line there. So we're going to put that line. Do I have it? I don't have that yet. I have the all-time high, but we do have a 557 mark, which we're going to get close to. I mean, I wouldn't be surprised if we touch that today. If you look at today, yeah, we're right below it, right? There's a big macro resistance area, but we're pushing 487. It wouldn't be anything to hit 557 today. Now, I guarantee you, initially, there could be a good reaction off of this. You might have a bunch of people who would be willing to take profit, and you're going to have a bunch of people who are willing to sell here. If they sell and it pops up just a little bit, they'll have to buy out, and it will squeeze even higher. Because sometimes when you start squeezing, it just keeps squeezing, like it just increases. Someone said that yesterday online, and I couldn't agree with it more, because I've been on the other side of that, trying to short it. So don't try to short this market until you really see a break of structure and an inability to make a higher high. And I'm not talking about the 1 minute or 5 minute. Like, you really need to be looking at the hour or 4 hour to start thinking you want to short something. Now, it could just happen, right? We could just break the 14 on the 1 hour and quickly dip down. That's a likelihood. But if you think you're just going to get a knife fall, which may happen and may not happen, a retracement is definitely on the horizon. We don't know when. Again, be reactive to it. Reactive in the sense of get confirmation that you're in the right direction, and then choose your best entry based off of your risk. And you might get stopped out, like I did. Got stopped out 3 times yesterday in the right direction, and still ended up 700, in the money. Now, I would have loved to have a $3,000 day instead of a $1,400 day, but still won't complain about that. So take your time, look at what's in front of you, and react without hesitancy, and you'll be somewhere in that sweet spot between not predicting but being proactive on the entry while being reactive to what's happening in the market. I think that sounds pretty good. All right, good luck to you, and I'll see you tomorrow.